We continue to look for ways to buy this market pullback on pullbacks, and it's been a runaway market. And so we continue to look at this because this type of strategy also has been working when you look at the cryptocurrencies and potential ways to trade that when the futures come out, or if you want to trade the cash. And so we have a VIX Swing strategy that's with the money management algorithms, and here is the back-tested performance summary. And when you look at the equity curve, it looks really good. And so this is a closed trade equity curve. But what you don't see is this intraday peak to valley, $15,000 drawdown. So this has no stop loss. This base strategy has no stop loss. But our money management algorithm version does have a stop loss. But the results aren't as good. So you have to, there's a little give and take when you develop strategies. You don't want to sit through this. You have to give up some of this average trade profit and total net profit and profit factor, and you trade in and out, not so that you don't get in those drawdowns. Instead of sitting through them, you give up some of this. I mean, the closed trade drawdown is small. This number is really only good on if you're considering day trade strategies, but when you look at overnight strategy, you have to look at this number. And so here is the equity curve again. So let's take a look at the money management algorithm version. The money management algorithm version waits for a drawdown to get in and also uses the pinpoint entry so we can reduce this drawdown. And it has a stop loss and a profit target on a 2-to-1 ratio. So now I'm going to go over to the money management algorithm version. I'm going to show you that. So here's the money management algorithm version. Looks at the original strategy when it gets in. If it's in a $3,000 drawdown, it trades until there's a $3,000 run up, and we use the pinpoint entry for the current trade to be down by 7 points, and then we get in on we use a $500 stop loss and a $1,000 profit target. So this is still nice. Actually, the average trade profit is larger. 170 is a good profit factor. It's smaller. Total net profit is smaller. The net profit as a percentage drawdown is actually higher. But you have your risk parameters in place. You have the $500 stop loss, $1,000 drawdown. Here is the equity curve. Nice recent equity curve. The only problem is it hasn't traded since September of 2016, because while we're waiting for a $3,000 drawdown, it has not had one. And so what can we do about this? What can we do to trade it now is the question. And so I'm going to show you that. Let's take a look at the parameters. We format the strategies, and you take a look at this. Here is the money management equity curve algorithm ref 7.0, and go over the inputs. This tells you what symbol you're looking at. The other chart, the ES 60-minute trading one contract using the limit entry technique. And then these are all the rules, and we're just using rule 6 and rule 12. The others are not used, and so they have zeros in them. And the corresponding parameters here are not in effect. And so you think, wow, that's a lot of inputs, but they're not all these inputs are not effectively used. They're not used at all unless there is a 1 here. So rule 1, if there's a 1 here, then these numbers are effectively used. But since you're only using rule 6 and rule 12, the rule 6 parameter is used. $350 loss. We're waiting for a $350 loss on the current trade. And then rule 12, we're waiting for a $300 drawdown on an end of trade basis, and then we stop trading once it's had a $3,000 run up. And so max daily entries is 1. We don't have a time of day. This is a 60-minute chart, 24-hour a day. Actually 23 hours is how this market trades. It's closed for an hour every day. Actually, it's closed for an hour and 15 minutes and on weekends. But we don't have any custom sessions. We're using the 24-hour set symbol at ES. So there's no entry times. There's no exit times. Stop loss is 500, and the profit target is 1,000. So that's one way to set this up. But what if we want to get trades now? What if we want to start taking trades now? You can turn off the buy the drawdown. Let's turn off buy the drawdown, and you set this up and you take a look at how it would have traded if it did not buy the drawdown. And so here are some of the recent results. Now this is not a terrible strategy, especially since here it's done really well since 5/24, since May of 2016 very little drawdown, and the average trade profit overall is pretty good, $83. This is inclusive. This report here is inclusive of $25 round turn slippage and commission. But since we have a $500 stop loss and a $1,000 profit target, you're going to have more losers than winners. And your close trade drawdown, or your intraday peak to valley drawdown, is 7,000, and so you see that that's since the beginning, 11/3/1997. What about since May? We can change the date. Let's go to May 1, 2016. I'm going to pause the video and do that. So since that time frame, here are the results. Let's take a look here. 37.8750 is your risk. So if you want to jump in on this, you can risk about 4,000 per contract, and potentially, if the market continues higher and moves in the same way it's been moving, this is one way to trade it. You can also increase that stop loss to improve your percent profitable. Let's see if that boosts the average trade profit. So the way you'd increase your stop loss is you'd go in here to the money management algorithm, and you would increase your stop loss amount, and we wait for the updated results. Quite a boost. You get 67% profitability. Your profit factor goes to 2. Your drawdown is around 3,500, 20,450. Here's your equity curve. Very nice results. And so it's very hard to get a 2-to-1, especially on the ES. And so it's 2-to-1 as far as profit target being twice as high as the stop loss. And so it's definitely a strategy to take a look at. And let's take a look at one other thing. So let's take a look at one other thing. We have 578 net profit as a percentage drawdown. What if we remove the pinpoint entry rule, or actually lower it? We could remove it first and see what happens here. Pinpoint entry rule is 0, and the average trade profit goes down. Total net profit goes up a little bit. This number goes down. There's more trades, so more potential to be a part. Take a look at the different cycles and compound contracts potentially over time if you have more trades, but not much difference. What happens if we have a $100 pinpoint entry 2 technique? Go down to pinpoint entry 1, and so pinpoint entry, and if we make it say $100, if it's $100 per contract and down by 2 points, basically, what are the results? So 23.3, a little bit better. 1.99, pretty good. Overall, you get about a $3,000 boost if you do that, so that's pretty nice. And so these are ways to trade it. What happens if you're basically taking the money management algorithm, and only you're not applying any equity curve management rules, you're just applying the stop loss and profit target if the base strategy is in a trade. And so this is a way you could potentially have captured this basic runaway market over the past year and a half. It's been challenging to trade this type of market. Let's take a look at some of the trades here using this, and I'm going to set the dates back to 11/1/1997 so we can see the total results for this. So I set it back to 1997, and just using this technique here, still not bad. Still the drawdown is close to the original money management algorithm, but at least you have some risk parameters in there, so you're not just letting it run down. But most recently, it's had the best equity curve, which makes sense because this is the most straight up market in a narrow range that I've ever seen. So it could continue for a while, or it could stop at any time, but this is one way to trade these runaway markets, and also one way to apply this to Bitcoin and other cryptocurrencies as they come out in December, and I'll have more information on that soon.